Joining me right now to talk more about that is the Chief Economic Advisor to Allianz, Mohamed El-Erian, and Chief Global Investment Officer at Guggenheim Partners, Scott Minerd. Great to see you both. Thank you so much for joining us. Your thoughts on that? 3.5%, 4% economic growth. What did you make of that, Mohamed?
I think you'll get 3% in the second quarter because part of the bad performance in the first quarter is reversible. However, to get 3% for the year as a whole, we need a lot more policy progress.
Scott?
I agree with Mohamed. I think 3% for 2017 is virtually unreachable right now. But I do think that some of the president's proposed tax changes, especially increasing the standard deduction, will give us a short-term lift. And so in 2018, if we can pass this tax plan, 3% is probably a realistic number.
A joint couple, a married couple filing jointly can now deduct $24,000. That's a big deal.
That's right. That kind of a lift to the middle class is big. Of course, you know, for the tax cuts at the high end of the spectrum, I'm not so sure those are going to be as stimulative in the short term.
So because you're going from 39.6 to 35% on the high end.
That's right. And we know that wealthy people don't tend to spend every marginal dollar. They tend to save. So the payback for that will be further in the future if we see a lifting of productivity from improved investment.
That's what's critical, a lifting of productivity. Mohamed, look at all of the plans that you've heard so far, whether it's the tax plan, the infrastructure plan. They're also talking about doing something on health care, probably this week, actually. Your reaction to what the president has been putting forth?
So I think it's important that we have policies that are aimed at economic growth. And that is the focus of the administration.
That seems that that's the priority.
That is the priority, and it's important to repeat it over and over again. So the first thing. Two is we've got to see detailed design, Maria. We have seen lots of announcements, but the detailed design is still lacking. Once that comes, then the market's going to be able to make a judgment about implementation. Important to remember, this economy is capable of growing faster. We are capable of unleashing high, productive, and inclusive growth, as long as the politicians focus on that goal.
Yeah, and the Federal Reserve obviously has started to raise interest rates. You have to wonder, given that GDP report that we saw last week, 0.7%, if the Fed is embarking on this, rate increasing campaign just while the economy hasn't even begun getting traction yet, or maybe just at the beginning of getting traction, does the Fed stomp away any growth with these rate hikes? I
don't think they will, and it's not just a weak GDP. The Fed has to look through weak retail sales, weak inflation. And I think they will, because first, we're starting from very low rates. Second, they realize that normalizing interest rate is part of the solution. And third, the rest of the economy remains strong. So I think we will see 3 hikes in total this year, and we will start seeing plans for normalizing the balance sheet.
And yet, Scott, these markets are up still since Election Day.
Right.
But you're not worried. You would still put new money to work in stocks.
I think so. At this point, Maria, we have underlying the economy is doing well. We've had some seasonal distortions in the numbers. When you look at Europe, we're back at levels of confidence that we haven't seen since 2007, and China's growing again. So I think for the moment, risk on is the place to be. But later in the year, we might run into some headwinds, especially if the tax plan gets into trouble.
If we don't see the tax plan materialize.
Right.
Yeah, I agree. Then the markets would sell off. You've been worried about this market, Mohamed.
Yeah, I see contradictions. Stocks are doing very well, but yields are 2.30%.
That's true.
Okay, that's a contradiction. Soft data, off the chart. Hot data, sluggish. Geopolitics, really messy. The market ignoring that. So there's lots of contradictions, and I think that investors have to be careful. These contradictions can be reconciled, and they can be reconciled by good economic policies, and that's why the politics matters as much as the economics right now.